Welcome to Altcoin Bull, the most popular crypto educational channel on YouTube. In this video, we'll talk about the recent crypto tax law changes. Please be reminded that this video is for educational purposes only and not financial or tax advice. The alterations to the crypto tax code are part of a broader overhaul of the Physical Infrastructure Bill of Law. Three key modifications have been made to the taxation of crypto. 1. A 1099-B tax form is required for all brokers. People disagree on what constitutes a broker because the law is ambiguous. They disagree on what constitutes a broker. Are miners, hardware developers, and others included? However, for the sake of simplicity, it means that all cryptocurrency exchanges will send you a tax form known as the 1099-B to report your profits. Using the 1099-B, you may see how much you paid and how much you sold a cryptocurrency for. Put it another way, the 1099-B reveals how much money you gained or lost on every transaction. Additionally, the 1099-B provides information on the dates on which you purchased and sold the item. As a result, it's important to keep track of when you acquired and traded your cryptocurrency. Short-term capital gains and losses are shown on the 1099-B. Long-term capital gains and losses are not shown on the 1099-B at all. Some brokerages, like Robinhood, are already giving clients 1099-Bs on all of their Bitcoin trades, while many exchanges have refused to issue 1099-B tax forms on the grounds that the regulations were unclear. Several, including Coinbase and Binance US, have made an exception. They didn't have to, and that was their justification. A 1099-B tax form is now a requirement for all exchanges in the United States, thanks to a recent regulation change that made it very clear that the government expects all transactions to be compliant. As a result, you'll receive a copy of this 1099-B tax form as well as a copy of the IRS. In other words, the IRS will have access to every piece of information you've ever provided. So if you don't want the IRS to see your transactions, you'll need to utilize an exchange that isn't situated in the United States. A non-US based exchange does not have to comply with US tax reporting rules. It's hard to find a US based cryptocurrency exchange that's as popular as a KuCoin. So please don't come with any amusing ideas. Any unlawful activity is not tolerated. Let me make this clear. Pay your taxes like a decent citizen. KuCoin is the world's third largest cryptocurrency exchange. So who's the first largest crypto exchange? Binance is the world's largest cryptocurrency exchange. In a single day, Binance processes $33 billion in transactions. Coinbase is the world's second largest cryptocurrency exchange, with daily transactions totaling $7 billion. KuCoin is the world's third largest exchange, with daily transactions totaling $3.5 billion. Again, you should pay all of your taxes since the US government is in desperate needs of funds. Moving on to the second regulatory change. Exchanges will need to improve their KYC procedures. Know Your Customer, or KYC, is a term that refers to a set of regulations that govern. You'll need to supply your entire legal name, address, email address, date of birth, and social security number if you utilize a US-based exchange. KYC is not required for KuCoin. KuCoin simply needs your email address and nothing else. You may do KYC on KuCoin if you like, but it's not required. If privacy is essential to you, KuCoin could be a good option. The third rule change is an amendment to IRC Section 6050. So this part of the IRC code deals with cash transfers of $10,000 or more. However, it has recently been updated to add cryptos. If you deposit $10,000 or more in cash to a financial institution such as a bank, you will be flagged. They will report you to the Internal Revenue Service or IRS and the Financial Crimes Enforcement Network. They complete Form 8300 and file a report against you. What you probably don't realize is that you don't even need to spend more than $10,000. At the top of the form, there's a suspicious transaction checkbox. So even if the transaction is less than $10,000, they may still report you if you're behaving dodgy. If you're behaving dodgy, they'll most likely report you. So if you attempt to be smart and put $9,999, you probably don't want to dress up like a drug dealer if you're going to deposit something close to $10,000, but just under that amount. As a result, use caution. This $10,000 requirement does not just apply to financial institutions. It also applies to other businesses. So if you pay cash for a car for $10,000 or more, the dealership will complete Form 8300 and report you. So it's the same for a jewelry business as it is for any other store. They amend the tax code to accommodate cryptocurrency. So if you want to purchase a vehicle with cryptos, or gold bars with cryptos, or anything worth $10,000 or more in cryptos, if the corporation is based in the United States or the store is based in America, they will be compelled to report you. These tax legislation changes will take effect in 2024, but the exchanges will most certainly gain a head start and implement these practices sooner than that. Before 2024, the exchanges will be collecting your information in order to compile your 1099-B tax forms. If you want to go completely off the grid, this is the way to go. You may utilize a crypto exchange that is not situated in the United States, and the one I recommend is Qcoin. Once again, this is the Altcoin Bull channel, bringing you the best and most updated news and trends in the crypto world. If you like the video, don't forget to subscribe and hit the notification bell. Thank you and see you in the next one.